questions. I now hand over to Balaji sir to take over. Over to you, sir.
Thank you, Anish. Good evening, everybody. Good morning to people on the US. It's obviously a very sad quarter for all of us here in Tata Motors on the passing away of Mr. Tata. This company owes its existence to him, and we thought we'll take this opportunity to continue to pay our respects to him. Thank you, sir, for continuing to inspire us. Next slide, please. This is a standard safe harbor statement. Nothing new to report here. Next one. It's been a pretty intensive quarter for us in terms of products and as well as other highlights for the business there. You already have seen some of these pictures already. But I think the call-outs, I would say, as far as domestic is concerned, I think the launch of the Nexon ICNG and 45 kilowatt hour has been an excellent success, followed by Curve. We also had an extremely warm ceremony for groundbreaking of the new Chennai plant that we had. We had the Honorable Chief Minister of Tamil Nadu as well as the Industries Minister with us, and the Chairman of as well. This is a project that we're all very proud of. It's something that we're going to create between Tata Motors and JLR to get products to market there. So look forward to continuing to work in this space. And on the JLR side, of course, substantial efforts underway for the whole EV transition with the Halewood factory getting ready for introducing EMA products there. And from a financing side, of course, both the RCF done and as well as the ratings continue to keep improving. So all in all, a satisfying quarter from that perspective. Of course, not so satisfying as far as the current quarter is concerned. Nothing new. We did call this out last quarter of the supply issues that we have faced in JLR, and one unforeseen last-minute holdback that we had to do in JLR, and continuing demand situation that we did indicate in domestic Indian business. Therefore, despite these situations, the first half is broadly held. But for the quarter, it's been a disappointing quarter with revenues down 3.5%, EBIT at 5.6%, down 190 bps, and profit before tax and exceptional items at 5,800 crores, down about 400 crores. Free cash flow, more on a full year basis, with a lot of working capital movement between first quarter, second quarter. On a full year basis, marginally down at 1,700 crores, and we would expect to see this reverse going forward. Next slide, please. Where did the growth come from? We declined by about 3.5%, of which 6.2% out of that came out of volume and mix, primarily out of JLR, and as well as at an overall level. And of course, we did see impacts in other parts of the business I'll cover subsequently. Translation with the pound appreciating vis-a-vis the Indian rupee, you did see a 3.3% increase on the translation side. And on a margin perspective, thanks to the decline in revenue growth, we did see operating day leverage that go right through, and we'll talk about that in greater detail subsequently. Net debt marginally inched up, not particularly concerned about it. We should expect to see this reverse and go into net cash by end of the year. With this, let me hand you over to Richard to walk you through the JLR performance. Richard, over to you.
Thank you, Balaji. So we go to the next chart, please. So the summary for JLR is that we were held back by outside forces in Q2, particularly the flood at Velis, which restricted our production to 86,000 units in the quarter. The good news is, even with these headwinds, we delivered robust profitability, which does show the underlying resilience of our business. And we expect to bounce back strongly in H2. So the top row in this chart shows the financial results in Q2. The bottom half is H1, and each of the following charts will follow the same format. So with 86,000 units of production driving 87,000 units wholesales, this is what's driven revenue down by 6% in the quarter. But even with this, we posted the 9th quarter of positive EBIT in a row, and the 7th quarter of EBIT over 5%. So in addition, even though PBT was down by 10% in the quarter, on a full year basis, it's actually up year over year. Operating cash in the quarter was 256 million negative. That puts us fairly much flat for H1. But even with flat H1 cash, we're still holding our guidance of net cash at year end. The bottom half of the page, revenue is flat for H1 year-over-year, but with lower volume, this means revenue per unit continues to rise. EBIT is down a little bit as a percentage, driven by increased levels of sales support, but we also expect EBIT to recover in H2, allowing us to hit our commitment of 8.5%. Next chart, please. So I won't go through this in detail.